can see the sun, I'm rising up, I feel the love now. Oh, it's in my vision. You know I ran around and I got lost, but now I found you. Well, I can't shake this feeling. Oh, it's gonna take me a little while just to get my head around this moment. But I can see the sun, I'm rising up, I feel the love now. Oh, it's in my vision. And it's telling me run, 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 run. Run, 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 and don't give up. And it's telling me run, 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 run. Run, 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 and don't give up.
Welcome to the Retirement Learning Lab, where we teach you how to retire without running out of money. My name is Van Richards, and this is the daily NASDAQ Stock Update. Thank you for joining us today. We have some really good stocks to talk to you about today. It's not flashy or it's not fancy or anything like that. We just got some good, solid stocks to talk to you about. As we have a conversation, if you have questions, make sure that you enter them into the platform, whichever one that you're listening on. If you're listening on YouTube, go ahead, make sure you subscribe, because I put a lot of stuff out there that's good information on investing and retirement and stocks. Go ahead and hit the subscribe button so that you'll get notified whenever that comes available. Also, the same thing if you're listening on Facebook. If that's your favorite platform, go ahead and like it, and you'll get notified when I have more broadcasts that are coming forward. Same thing with Twitter. I have a good following of people on Twitter, and I love you guys. I thank you for following. And today we're going to be talking about two different companies. They are really, really different. We're talking about a tech company and a food company. Microchip Technology is a unique company, as is Mondelez International. So let's get right into it and talk about it from that standpoint. Oh, before I do that, I want to approach this from this standpoint. As I talk to you about these stocks, as I do every day, I pick out two stocks from the NASDAQ 100. And the reason that I do that is because I'm a big advocate in direct indexing. That is, investing directly in the NASDAQ 100. Okay, that's the top 100 stocks in the NASDAQ. And in picking the stocks apart as we go through them, you're going to see, even though these are the largest stocks, these are the largest companies, some of them in the world, they're not always going to be the best stocks for you at this point in time. I'll point out, for example, yesterday we talked about Marriott. Marriott was a big loser today. Look, Marriott is a great company. I hate talking and sounding negative on any company, because there's people there, company or people. And they have the potential to come back. It's just right now, the situation that we're in because of the coronavirus pandemic, people are just not traveling as much. They will at some point in time, as Dr. Fauci said 2 days ago, at some point in time, COVID-19 will end. But until that point in time, you have to look at your portfolios from the standpoint that, are you going to be better off invested in X or in Y? And that's really what we're picking apart when we're talking about these investments. And the approach that I take with each of these stocks is the same approach that I would suggest you to take with any investment that you're considering. I don't care if it's a mutual fund, an ETF, a stock, a bond, real estate, a car, whatever it's going to be that you're going to be as an investment. You need to look at three things. Number one is you need to look at the earnings that are coming off of that company, off of that investment. Number two, you need to look at the stability of that investment. And then third, but not least, is going to be, how does it compete? So let's get into it today and talk about Microchip Technology and about Mondelez International. They're two really interesting companies to go into. Okay, let me make this just a little bit bigger for you so that you can see it even better. I have a short clip that I prepared on on Microchip Technology, and I'd like to play that for you. So let's begin with that if we could. All right, great. Microchip Technology ended off the day 2.05%. And that's not really bad for what's been going on in the markets in itself. Now, I want to take just a moment and talk to you about what happened in the market today, because you might be hearing some news that it's all because of the coronavirus, the market volatility that happened today, where it's all about the fact that, Congress is not giving stimulus to, the country from that standpoint. Yes, it's all of those different things. But today was particularly more volatile than days previous. And this is the reason why. Today was actually called, it could be called triple witching or quadruple witching. And what that really means, it's not anything demonic or whatever my association with the word witching. The idea is that there are contracts which are created in between buyers and sellers for options. And what that really means is that when you buy an option, you buy a put or a call. And essentially you buy a contract to buy something at a certain price or to sell it at a certain price. Now, those contracts have expiration dates, and it just so happens that there were 4 types of contracts that ended all today. And the closer they get to their expiration date, the more volatile the stock that it's involved with gets. That's a very simplistic explanation of it, but I want you to understand that the idea of having all of the options expire on the same day has a big, big effect in how much the stock market goes up and down. So that's a big deal with today. And so the next time you hear the word triple witching or quadruple witching, you'll know exactly what it means. Let's get into a little bit more of Microchip Technology. It's a great company. I think that it's doing very well from the standpoint of profits. It had its day with the declines basically the same as every other stock that's out there. When we had the coronavirus market pandemic that hit us in between February and March, you can see where the dancing cursor is. It was really chaotic from that point in time, but it's actually recovered pretty well. The stock a year ago on the 18th of 2019 was selling at 92.34. Put that little 4 on the end of it. And then today it ended at 101.4. And you might think, wow, 9%, that's nothing compared to, Tesla or Apple. I think that with some of those stocks that are like the Teslas and the Apples that are returning double, sometimes triple digit rates of return, don't be brought into a false expectation. This is not going to continue forever. If you see a high single digit rate of return, that's not a bad rate of return. Now, you might be looking at me and thinking, this guy's crazy. I'm getting 20% or 30% or 40% or whatever it is in XYZ stock. That's not going to happen forever. I will guarantee you that. There's not much I'll guarantee, but I'll guarantee you that those double-digit rates of returns or triple-digit rates of returns are not going to continue forever. If you look at Apple over the last couple of days, week, it's lost about 22%, which is about, $500 million in value off of its highs. So be reasonable in your expectations of your stocks. A 9.8%, 0.8% rated return is not bad. Now, remember when we go back into looking at the fundamentals of these stocks, the first thing that we always look at is going to be the earnings. And when we look at the earnings for Microchip Technology, let me make it just a little bit bigger for you on the screen here. And I'll remind you that as we look at this, the solid dotted line, the solid line is going to be the actual earnings per share. That's how much profit that the company has made. The dotted line is going to be the estimates, and usually the estimates come out obviously before the actual is realized. Now, if you're interested in seeing what the company actually has been saying and what their projections are for the future, if you look at the notes to this show today, you'll see that I've put in the link directly to Microchip Technology's investor website. And also when we start talking about Mondelez, I put a link in there directly to their investor website so that you can see directly. A lot of it's interesting to look at. And I think if you've never done that, take a few moments and click on those and you'll see what I'm talking about. You're going to see a couple of other links in there too, to different things that I've written, different things that I've recorded. There's one that's actually an unlisted recording that I made on different sectors that I believe that will be favored or unfavored or unfavorable during this this recession in essence. And truly, if you look at it from a stock market standpoint, we're actually not in a recession anymore. We're back into a bull market. But from an economic standpoint, yes, we're still in a recession because there's a lot of people that are still unemployed. Okay, so let me get back over here to talking about Microchip Technology, because if you look at it over past quarters, all right, go all the way back over to 2015. In 2015, their estimates were a little bit, their actual returns were a little bit lower, but every single quarter after that point in time, every quarter since 2015, except right here, there was the second quarter of 2020 that was below the estimate. Was there anything happening in the second quarter of 2020? Yeah, okay, the coronavirus market, pandemic market crash, whatever you want to call it from that standpoint. But the idea is going to be every single quarter they've done well from the standpoint of earnings. And remember, that's the first hallmark, the first cornerstone that we look for when we're investing. Oh, a really good thing about this company too, and I love talking about dividends because they're awesome. Dividends are awesome, especially if you're retired, because if you're retired and you're out there looking for income, you're not really going to be getting it for the next couple of years off of bonds in essence. Now, yeah, there is a difference in between the risk that's associated with a stock and that's associated with a bond. But if you're looking for income, the only way that you're going to get anything really, unless you're going to accept the less than 1% that's available in treasury bonds, you're going to have to go to stocks. And you really need to center in on looking at stocks that have good earnings, just as we've talked about. Also go back and look at what the historical payment has been on the dividends. Now, I didn't throw that up there today, but I will tell you that the research that I did right before I came on the live stream today, each of these stocks have dividends that they have paid and have paid consistently for years. And actually, each of these stocks have increased just a little bit over the period of years. Now, I have to qualify that by telling you, yes, the past performance of a stock and its dividends are not guaranteed that the future is going to be the same. Past performance is no guarantee of future results. But keep in mind that if you're looking for dividends, a good place to consider is going to be consistent company dividends, corporate dividends in essence. And Microchip Technology is a good place to look at from that perspective. Okay. The next thing to look at is going to be, how did this company compete? When we look at it compared to Microchip Technology, Texas Instruments has a similar business it's a lot more diversified than Microchip Technology, but they've actually done similar. And you can see in blue, if you look at the screen, you can see that Microchip Technology is in blue and Texas Instruments is in red. OEN Semiconductor is in gray, and then Maximum Integrated Technologies integrated product is going to be in the kind of purplish color from that standpoint. I'm not sure what that is. Oh, another thing to remember about Maxim Integrated Products is going to be, this company is going to be merging with Analog Devices before too long. And Maxim and Analog, when you look at their performance, that will be mixed. It will be meshed together. And actually, Maxim has had a pretty big boost from the news of the merger that is going to go on from that standpoint. But remember, as I mentioned before, will 1,000 times later, past performance is no guarantee future results. Now, let's go forward and let's look at the stability of this stock. Just as if we were talking about anything in your retirement portfolio, we want to talk about the stability of the stock. How stable is it? Now, when I talk about stability, I refer to something that's called a moat. And a moat's not just something that's around a castle. A moat is something that's also around a company. It's that invisible barrier that that company has dug in between them and their competition. It's this. The moat describes the sustainable profitability of a company. And when we look at a company like Microchip Technology, if you are a product maker and you choose a chip, you're going to choose it basically because it's consistent. And most product manufacturers that use chips in whatever their process is going to be, and you saw that on the video earlier, any of those types of companies, whether it's going to be medical, aerospace, cars, automotive, they stick with it because they know the slim margins of error that are in there, and you can't have errors in some things like that. I mean, especially in the medical field or even in, you know, the aerospace field, you can't have a wide margin of error. So companies will stick with chip makers, and that builds a very big moat in between Microchip Technology and other companies, is because there's a lot of stickiness that goes on with companies that select the chip manufacturer in itself. They have some proprietary design benefits too, because they've made the chip, they own the patents on it, and that's something that can't really be duplicated. So in a company like this, we're going to have a wide moat. They have a wide barrier in between them and their competition, and they have a certain level of expertise for manufacturing that can't be duplicated either. Okay, so let's move on over now. We talked about that. Oh, EBITDA. EBITDA is not someone from another country. EBITDA is going to be earnings before interest, taxes, depreciation, and amortization. And the reason I bring up EBITDA is when I go to talk about Morningstar's rating, it's all based on EBITDA. EBITDA is earnings per share. It's a more complex version of it. But the idea is when I'm looking at a company like Microchip Technology, Morningstar is saying that this stock is valued at $108 a share. And today it closed at 101. So in essence, this stock really is trading at a discount of 6.11%. So with that, Morningstar has given it 3 stars. Now remember, when we talk about the star system, it's not like you're talking about a restaurant that has good food or a hotel that has good service. When you're talking about the star system that accompanies stocks, you're talking about the valuation of those particular stocks. And remember, as I talk to you about this, this is the same kind of conversation that I would have with you about any aspect of your retirement account. If we were talking about how your particular investments fit you, we would look at it in a methodical method, just like what we're doing in this conversation with every single stock that we're talking about. Okay, so as we move on, let's see what the other analysts say about Microchip Technology. And what I do is I go out to a rating service of companies, and what they do is there are certain analysts that specialize in technology. And in this particular poll, there's 15 analysts that were polled and asked what their opinion was on Microchip Technology. And in essence, we saw that 12 of them said that it was a very strong buy. One said it was moderate and 2 was hold, which is actually really pretty good. So when it comes to the overall recommendation that these analysts are giving on this stock, it's going to be this. So the average analyst is saying, yes, this is a strong buy. I want to remind you, though, that this is not my recommendation that you go buy or go sell this particular stock. I'm reporting to you and trying to educate you on what other analysts are saying about this particular stock, and they've actually got very favorable opinions of it. All right, so let's move on. Let's talk about the next company, which is Mondelez International. And if you don't know the name Mondelez International, I'll guarantee you within the next few moments, you're going to know the products that Mondelez International has. Watch this real quick. Okay, that's Mondelez International. I found it very interesting, because when I first started learning about this stock a while back, I was familiar with Oreos. Hey, who's not familiar with Oreos? They're vegan. They're great. That's an awesome thing. Oh, here's the best news. Coming up for Thanksgiving and for the holidays, they're going to have gingerbread Oreo cookies. Awesome. Okay. But when we get into the seriousness of it, yeah, this stock was down 1.21%, but that's not really anything in comparison to what's been going on. We want to look at the future of this. Now, with all the people that are quarantined at home, do you think that these products are popular? I want to ask you another question too. If you were going to buy an Oreo cookie, would you buy a knockoff brand Oreo cookie, or would you buy the name brand? I think that you probably would buy the name brand. Maybe, maybe not. Okay, let's see what's happened with this stock over the past year. A year ago, it was trading at 53,511. Today, it ended at 56.52. It's up only 5.62%. But listen, I told you this before when we're talking about Microchip Technologies. Don't get spoiled with double-digit or triple-digit rates of return. It's not going to last forever. A 5.62% rate of return is not a bad rate of return. So as we look further at this particular stock, another good point is going to be the dividends. Wow, a 2.20% dividend. Now, this type of stock is going to become more popular as time goes by. And if you listen to the news, one of the big reasons that the market was kind of shook up this week was because the Federal Reserve came out and said that they're not going to be raising interest rates until 2023. It's going to remain near zero. So if you're an investor and you're looking for income, like, hello, a retiree, and you're looking for income, the only place you're really going to get anything that's going to be over 1% is going to be through stocks. And I recommend that you that you investigate a lot quality stocks and look at their earnings, look at what their history is. Now, when we look at the history of Mondelez International, you're going to find that this company has a pretty good history of paying dividends for years and years, and it's been consistent and it's grown over the period of time. Now, obviously, the past performance is not going to be a guarantee of future results, but when we look at the actual earnings, look at this company. I want to make this just a little bit bigger. I get kind of excited about this because I think that this company has some awesome background. Remember, I'll repeat this again for you. And if you've joined us just now, welcome. Appreciate you coming. Hey, listen, if you have just joined and you like the information that you're hearing, go over and hit the subscribe button. Or if you're on Facebook, hit the like button. If you're on Twitter, hit the heart button, whatever it is, so that you can let me know that you like the information. Number one, I'm glad to take comments too. Make sure and type them in. The other thing is, if you're over on Facebook or you're on YouTube especially, you can look at some of my past broadcasts because I'm covering the top 100 stocks in the NASDAQ 100. And you can go back and look at some of the past stocks, and I'll cover them again over the future, and you can see how it's going to work. Okay, let me get back into what I'm talking about today. What I'm talking about today right now is Mondelez International, and the solid line that you're going to see is actually the earnings that have been earned on this particular stock. The dotted line is going to be the estimate. So when we look at this over a period of months, period of years, if we go all the way back to 2014, the estimates were much lower than actually what they were paying. Now, in 2015, the fourth quarter, they were under the estimates. But if you look at most of the quarters, again, in 2016, the fourth quarter, it was down. But in most quarters, they have exceeded the expectations, even during the coronavirus pandemic. But gosh, hey, I'm sure that there's a few of us out there who have eaten a cookie or two during this pandemic that's kind of helped us get through a day. All right, but that's the idea with Mondelez International. Let's keep looking at it and see how they compete with other companies that are similar. Now, when I look at Mondelez, I also compare it to Campbell's Soup. Yes, I know soup and cookies, two different things, but they're a food product, and they're very similar. The pandemic has actually been something that has pushed forward the sales of these different products. We also look at General Mills. That's probably going to be a closer fit with Mondelez. And then also we look at the Hershey Company. That's similar to the different treat products that Mondelez has. And General Mills has been over top of all of them, but Mondelez and the Hershey Company and Campbell's Soup, you can see that the spaghetti graph has moved about the same during the same period. So the reason that I throw this up there is to give you a visual idea of how these companies compete with each other. Now, we could go back and we could look over 5 years, 10 years, but if you look in the most recent, in 1 year, they've actually kept up with their competition from that standpoint. So what's the stability? Oh, one last thing, remember, the past performance of this is not going to be a future guarantee. But as we move forward, when we talk about the stability of these companies, I think that one of the biggest things going for Mondelez is going to be the brand recognition. Chips Ahoy cookies, Oreo cookies, Clorets gum. They also have Hall's cough drops. They have Cadbury. When it comes to Easter, Cadbury eggs. Who doesn't remember the lion with the Easter ears on? It's the brand recognition is huge when it comes to these type of products. Now, Mondelez has been a little different than some of its competitors. They haven't really buckled under to lower prices. They've kept with their brand recognition, and it's actually paid off for them over a period of time. So brand recognition is a big benefit. They're a huge company. They have the economy of scale going for them as well. Now, when we look at what the analysts are saying about this particular stock, we know today that it closed at 56.52. Morningstar is saying that the fair market value based on EBITDA, I like saying that, EBITDA, earnings per share, the fancy earnings per share calculation, is $53, which really means that this is trading at a 6.64% discount, and they give it 3 stars. Okay, let's keep moving on and look at what the other analysts are saying about this stock too. Because when we look at what the other analysts are saying, they're actually taking a very strong look at this. 12 analysts say that it is going to be a strong buy, and only 2 of them are going to say that it's a moderate buy. There's nobody that's saying that it's a hold, and there's nobody that's saying that sell. So it's pretty easy to figure out what the overall recommendation on this stock is going to be. Yep, it's going to be a strong buy. So when we look at it on the overall spectrum of things. Okay, so just to remind you too, this is not a recommendation for you to go out there and buy this particular stock. And I'm going to remind you about this. It's really, really important that when you look at stocks, and I'm talking to you as if you and I were sitting down to have a cup of coffee and talk about your investments. When you look at your investments in themselves, they have to fit you and what your requirements are. I know there's some of you that don't like stocks. You're probably at this point not watching the show. So for those of you who might be a little skittish and thinking, I want to get some more information on investing, and this looks like a good person to listen to, and I thank you for listening if you are today, as obviously you are. But my point is that your actions need to be tailored just to you. You can't look at it from somebody else's perspective. You have to look at what your total assets are and how a particular stock or how a group of stocks fits you. An index fund may be great for you. You may need something like a bond fund or an annuity, or you may need something that's going to be more tax sensitive, like a direct index strategy. All of those things have to be taken into consideration, and they have to be personalized. So what I'm offering to you right now is that if you want to talk about your particular situation, go over to my website, which is at richardsfinancialplanning.com. And this is the first page you're going to see. And if you click on the schedule a call to learn more button, you can set up a time to spend 15 or 20 minutes talking to me. You can ask me any financial questions that you want, and I'll be glad to answer them for you. If after our conversation, if you don't want to continue, that's great. No pressure from that standpoint. I'm glad to answer your questions, but if you go over to the website at richardsfinancialplanning.com, you can hit the schedule a call to learn more button, and that'll bring you over to my special calendar that you can set up a time to talk. So with all of that, since it's Friday, I'm going to say have a great weekend. And if you're listening to this on the replay, remember, hit the subscribe button, the like button, the heart button, whatever it's going to be. And you can get your information by putting in other words, if you have a question, go ahead and type it in, because that still comes to me even after the show on the replays. And with all that, I look forward to talking to you next week. We'll have some more great information about stocks. Until then, have a great weekend.